Good morning, everybody. It's the 18th of February. We are Signal Centre talking ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, Joe. Welcome back.
Thank you very much. Glad to be back, although
Yeah,
it's only a fleeting visit.
yeah. When are you going away? You're going away Sunday night?
Sunday morning.
Oh, wow. Wow.
Yeah,
Nice one.
4 a.m. pickup.
Yeah, you brought the wind back with you, though, mate. What's all that about?
Yeah. Sorry about that. It's
Did you
not
know
very
that
good
wind
out
was
there.
going to happen, and that's why you came back a day? Sort of like, I just thought that you were sort of like away and you'd have today off as well. But I
Yeah,
didn't.
well, I thought about it, but then I thought I'd better do some work
You
just to
missed
clean
it.
up a little bit before. I did miss it, yeah. Missed you, Steve. I didn't miss it.
Oh,
I
that's
missed you.
nice. That is lovely. I missed you
Yeah.
too.
Okay, well, let's get stuck into the latest news then to finish off the week. It was a bit of a volatile session yesterday, and that's due to the fact that the Ukraine concerns are increasing again. NATO officials were notably cautious over the Ukraine situation and continue to express important reservations on Thursday. Risk conditions tended to drift lower during the day and after the European close, and there were reports that Russian forces were moving closer to the Ukraine border, which triggered fresh alarm. That then triggered a move into safer haven plays. Overall risk appetite was fragile yesterday. We saw equities lose ground, and there was further underlying demand for defensive assets like the yen and the Swiss franc, and also gold, which reached a fresh 8-month high after months pretty much doing nothing. So that's quite interesting. It is the end of the week, so there's a little bit of positioning ahead of that. There are no major data releases today, but we are expecting to see continued choppiness in the markets ahead of the US holiday also on Monday. There was a solid Philly Fed reading yesterday, according to the Philadelphia Fed Manufacturing Index, which retreated to 16 for February from 23.2 previously, which was slightly below the consensus forecast of 20. There are also slower rates of growth for production, new orders, and unfilled orders. But all in all, the number was pretty solid. We've seen a retail recovery in January for the UK market. Sales increased by 1.9% for January, following a revised 4% decline for December and above the expectations of 1%. So that's pretty good. Although that may start to get bitten into a little bit by the inflation and cost of living numbers that we are now starting to see. And the latest country to publish inflation numbers was actually Sweden, where inflation edged lower. Consumer prices declined 0.5% for January, and year on year at 3.7% from 3.9% previously. So maybe that's a bit of an indication that things are potentially beginning to top out on the inflation front. That would be certainly very welcome indeed. Okay, so let's get stuck into some charts. Big moves in some of the equity markets in particular yesterday. Steve, what's catching your eye? Going for gold, are we?
Go for gold, mate. Yes, why not? I did have a little bit of a stumble this week where I think I sold gold at the start of the week, thinking that everything's going to calm down a little bit, but it's obviously not done that, and we've had the break higher. The one chart I wanted to look at really and focus on is the longer term chart, the weekly chart, and just show you the sort of the picture it's painting now. I've been talking a long while about
You've
being
been calling
bullish.
this a flag for a long time.
Yeah, way too long, some people might say. But even if we break it down, I'll tell you what, let's just get rid of the flag. I'm not saying it's not a flag. I'm just saying let's get rid of it for a second while maybe we redraw this triangle formation. So this is obviously it's been quite an accelerated move since August last year, but it's got a really nice trend line coming in, and we tend to sort of get a breakout of triangles around about this time. It's sort of like close to the end of the apex. We've had the break very, very clearly this week, and we can see we've had a great sort of like push higher. We've taken out the swing high that we saw back in November at 1870. Well, it comes in at 1877 on this chart. We've got a target now of May last year, and that's at 1916, and that looks pretty. I feel quite confident in saying that we need to target this level to test this level of resistance. So something it just feels like this momentum is sort of like rolling. We've got this really decent follow through. So the high, we've been up above the $1,900, got to 1902 this morning, and yeah, not far away. Only another $15, a short hop really. This basically will really focus on this double bottom formation that we had from the sell-off from the all-time highs at 2075. Sell-off down to here, these two low points which were retested, the 1677 support level, and the high in between there is 1916. So bear with me now. A break of this formation, or a break of the neckline, we'd call it, would lead to a potential measured move up to here, 2,155, which isn't beyond the realms of possibility, especially if things escalate with Russia, Ukraine, or other countries get dragged into it. So that's a bit of a concern. That's not ideally the reason that I wanted this bullish flag. It was more of like hoping that the dollar was going to be impacted. But obviously, the difficulty now is in times like this, you get the sort of like safe haven assets, people driving towards them. So you get yen, Swiss, gold, also sometimes dollar as well. So when dollar has a rally and gold has a rally at the same time, that is like a double safe haven bid. So we'll obviously, Joe will focus on the dollar in a short while. In terms of oil, funny enough, this hasn't sort of like had the same sort of move. So it's really sort of like you'd think that as the escalation of tension would filter through, we'd get a positive move in oil as well. But we are pretty overextended. We can see this rally over the 1, 2, 3, 4, 5, 6, 7, 8. Never goes more than 8. We all know that over these 8 weeks. But a real reversal now. We saw the signs of it, or the potential of it, last week when we stalled around the 78.6% fib at 91.16, just above there. That provided a hanging man candle, which can be seen as negative at the top of a range. So we're getting confirmation now this week that could be the top. We're trading at 88.43. We've been up to $94. So a really nice reversal on the weekly chart. And if prices stay around here or close around this level or even lower, then that sort of doesn't bode well for next week. We would expect a little bit of a confirmation from another week, another sort of negative week. Cryptos has had a bit of a turnaround over the last 24 hours. We can see on the daily chart, even on the weekly chart. Let's start with that first, because we talked about this previous support now turned into resistance level, coming in around about the 45.5, 46,000 level. Shooting star been formed, and this week another shooting star is forming. So that's a real negative turnaround and potential for further downside. Again, I think some people were talking about Bitcoin being potentially a safe haven driver, but I suppose that would only really work for me in terms of the currency it's matched against, rather than anything else. I think there was obviously talk of in the Ukraine of a cyber attack. So if there is cyber attacks, then that maybe doesn't help the crypto world. Don't know. Maybe I've just made that up, but it feels like the right thing to say.
I think
diving into indices, let's go on the shorter term. Let's go and look at the daily chart. We've sort of like we've been under a bit of pressure this week. We had a decent sell-off yesterday as escalation of tension, but recovered a little bit overnight with obviously the sort of like NATO officials and the news that Joe's just read out. The risk conditions tended to sort of like move again overnight, and it doesn't feel so bad. So equity markets have stalled on the sell-off. 74.85 is the support in FTSE. We've had a bit of you can see this formation over the last few days in DAX, the sort of like reversal after this sign of indecision on Wednesday's candle. Thursday, a bloodbath, and then Friday we've had a positive start, although we're just paring back those gains. We've been up to 15,360, and we're back 100 points lower, 15,255. Support coming in on the DAX at 15,134. And you can see the reversal again. The rally wasn't great, but we sort of a break below yesterday's low at 34,255 could open up the downside even further on the Dow side of things. Nasdaq similar type of levels, 14,143, but also really needs to take out that 14,050 level in the Nasdaq to really open up a more assertive move towards the swing low from January. 30,724 really the target there if it does break. Same with S&Ps. We stalled today at yesterday's low, 4,375. Support just below that, 4,361. And then the head and shoulders formation is probably the main formation that we're considering at the moment. We've had the rally left shoulder, the head formed quite a sharp acute right shoulder, and really sort of the nice turnaround we got from the 61.8% fib. It seems to be capping everything at the moment. Really needs to sort of like get above those sort of levels to stave off this indice concern. I think that's me, Joe.
That's one, Steve. Thank you very much. Okay, let's have a look at FX. So starting with dollar index, let me get the charts up. Still trading in this bullish channel. We've seen a decent reaction from the lower end, which started around the 10th before sort of finally topping out around about the 14th, so on Monday. And since then, it's sort of dipped off a little bit. So despite there being a clear move out of riskier assets, the dollar index hasn't really been bid up as a result of that. It's been some strange moves actually in FX, although volatility has certainly increased. If we take a look at euro US dollar, that's rallied into this resistance zone here at 114.83, but failed and just sort of moving sideways over the last few sessions. So a bit stuck in a range, it would seem, for the time being. And if we look at cable, that's actually moved higher over the last 4 sessions and inching closer towards this downtrend resistance line. So it appears as though sterling is outperforming at the moment versus the US dollar. The reason I'm saying it's strange is if you look at some of the what typically called riskier assets like Aussie and New Zealand dollar, they're actually not doing too badly. Although you can see there's clear amounts of volatility because the ranges are quite large. Overall, it's actually holding up quite nicely versus other currencies at the moment. This is against the US dollar. It looks as though it's trying to push up above this 38.2% resistance that we've got at 71.92. Very much on the front foot today, up by 0.35% as things stand. And it's a similar situation with New Zealand dollar. That's actually trying to overcome now this resistance at 67.01. We've had a couple of attempts at looking above this level previously, which have all failed previously. So we'll wait and see whether or not it can hold on to those gains on a Friday close, and that may trigger a continuation higher, which goes against what we're seeing, I suppose, at the moment in this move out of riskier assets. Maybe that's a commodity link as to what's going on with Ukraine and obviously geopolitical tensions. We do tend to see commodities perform quite well. If we look at sterling against other currencies, this was quite interesting, I thought. Sterling versus the Swiss franc. So I've been trading in a really long-term downtrend, as you can see here, but just wondering whether or not there was an inverse head and shoulders forming on this, and whether we could actually see a breakout of sterling versus the Swiss franc again. Typically seen as a safer haven asset, Swiss franc. But if we see a breakout above where I've got the neckline here at 26.09, then that would sort of ignore that theory of it being a safe haven, actually suggest that sterling looks like a better bet as a safe haven over the coming weeks and months. So maybe something to keep an eye out for there on that particular pair. I think that was pretty much it. Just have a quick look at euro sterling. Nothing much changing there. Still trading very much in a downtrend. Failed at this 61.8%, which was a nice area to sell again. And it looks as though we're going back towards these key supports between 82.85 to 82.75. So that's it from me on the FX.
Oh, nice one. I like it. Sterling, the one to go to. Love it.
Yeah. It would seem that way. So, gun to the head trades while I was off. I've stuck them in the spreadsheet, Steve. You had a
Oh wow.
stonking day yesterday.
Yeah, it felt like a good day yesterday. Sort of like I watched it from afar, but yeah,
Yeah, so you
really
had
pleased
on
with that.
Monday, you had a stop out on DAX. Then you played gold on the short side and actually did well on both days, or have I got that wrong?
No, I think I was definitely stopped out on.
Maybe I've got the numbers wrong here on one of them. Yeah, that was okay.
Yeah,
Yeah,
that's that. Yeah, I definitely got stopped out on one of them. Definitely.
okay. I'll have a look at that. But yesterday, there's no denying that there was a 195 tick winner on DAX. So well
Yeah,
done for
happy with
that.
that one. Yeah.
Almost 2.5 hour out of that one. It came pretty close to the stop before a little bit of a rally, I think.
Um, no, I'll tell you what. I think.
Sorry, pretty close to the target. Sorry, I meant to say.
Oh yes, sorry. Yeah. Very close to the target, and then we got that rally at 1:30 this morning as well. But yeah, it's sort of like yeah, I was quite pleased with that one. I think originally it was 4-1, but then my stop was pretty tight, and so I adjusted it. I'll have to re-look at it. I can't even remember what I did yesterday, but yeah, no, happy with that. And yeah, feels like a bit of a turnaround in indices, although a fragile one,
Mm.
shall we say. Um, I'm sort of struggling a little bit with where to go this morning. Gold, I don't know. I sort of, I don't feel it doesn't feel like we're going to sort of get that sort of gold move today. We may have to wait till sort of Sunday night when everyone's asleep in bed, and then they
Yeah.
spike it up. So yeah, I mean, if anything, I'm looking at gold as basically, if you look at the hourly chart, we've had this left shoulder head, potentially a right shoulder, maybe. Um, I know sometimes I look at things and see things that no one else does. I don't think that's a good thing. It may
That's
be
called
even
an edge, Steve.
that's got or madness,
Yeah, maybe.
um, something like that. So yeah, getting short and it's already on side. 1895. Where am I going to target? Let's again, let's bring a bit of a fib in and just take this level here. Yeah, target and move back to 18. 80 something, but having a really tight stop. Even today's was it? Yeah, this is a 30-minute chart. So what's the high on that candle? 80.95. I feel like I need to give it more than respect it a little bit, but that sort of, yeah, that's too much. Well, that's about 2-to-1 risk reward. I'm sort of I'll go with this. Hang on, let me just adjust slightly. Targeting 1883.5. That's where I think just a 2-to-1 risk reward, just having a little bit of a pullback, and then potentially back to this sort of like neckline here, and then we'll see what happens towards the end of the day.
Okay, lovely. I'm going to take a look at Aussie yen. Sorry. So this is the hourly chart, and yes, it's been pretty volatile over the last few sessions. Big ranges in this particular pair, which, from a trading perspective, is a good thing because it gives you plenty of opportunity. So we can see here this has touched above the high of the average true range bands that I like to use. It's also rallied into this previous high here from the 12th. From yesterday, from the 17th of February. And failed. So I'm going to try and play the range again on this one today, selling at 83.05, targeting a move down to 82.41 with a stop really tight actually above the high that we posted over the last hour at 83.36. I had to make it that tight in order to make the risk reward acceptable. So we've got a 2-to-1 on that one. So it might be a bit quieter today, maybe as it is ahead of the weekend, and it's a US holiday on Monday. But anything can happen, I guess, with the Ukraine situation between now and Monday. So
Yeah,
be aware of that gap risk if you've got anything open over the weekend.
yeah, definitely sort of yeah, it does feel a little bit wintry with all these windy conditions outside. So yeah, let's see how things play out. But
Mm.
um, lovely.
Okay, just a quick one. Data today: 130 US durable goods orders, personal income and spending. So two numbers out at 130, and then at 3 p.m. we've got US consumer sentiment and also pending home sales. So a couple of data points to watch out for. Not considered sort of overly high impact considering what else is going on in the world at the minute. So just be aware of those.
Brilliant.
And that's it from us for the week.
Excellent. Well, we'll see you. Monday week, I suppose, Joe.
Yes. So
When
I'll
do you
leave
fly
it in your
back?
capable hands. Friday.
Okay. Yeah.
So I'll be back about Friday afternoon, I think.
Yeah. Fantastic. All right.
Cool. All right, guys. Have a good one.
Brilliant.
See you
Cheers.
soon. Bye.
Bye.